You're watching Auto News Now. I'm Kristen Strakalaitis. On today's episode, Jamie Butters, host of the Daily Drive podcast, sat down with Presidio Group President George Carolus. They talked about why buyers are aggressively acquiring dealerships and will continue to do so in the near term.
George Carolus, welcome to Daily Drive.
Thanks for having me, Jamie.
So we're looking back today at the year that 2021 was, such an epic year for buy-sells in the mergers and acquisitions in the retail space, and of course how it's carrying into 2022, still very active. What is the attitude right now of buyers and sellers around profitability? How does anybody judge what's a reasonable baseline for future projections?
Well, that's a great question. Current profitability, as you know, as everyone knows, is at record levels. Dealers are making, generally triple, some double, but most triple what they made pre-pandemic, and driven by, of course, a chip shortage and great demand by the consumer. That has just really increased margins to record levels and really fuel these profitability levels. And so buyers are, dealers in general are euphoric, and these are the best times, some of the best times for sure. Buyers are, prevalent. There's a lot of interest still, in more than we've ever seen from numerous buyers, and more new buyers than ever for dealerships. And those sellers that are looking to opportunistically take advantage of these record levels as well are in the mix. And what we're seeing though is buyers and sellers aren't necessarily on the same page all the time, right? Because while dealers are enjoying these record profitability levels, as a buyer, you put your buyer hat on and say, well, how do I have to value this on the future of long-term earnings potential of this business, and is this current level indicative of that? And so that's the multi-million-dollar question that is sort of running through everyone's minds, and is creating some spread between buyer and seller expectations. And it's I guess we can just say these are really interesting times for deal making.
Interesting, I'm sure. You mentioned there are more new buyers, and that's a little surprising to me. I mean, I've known of some, but of course, we know the big publics have been so active. But who's new in the market? How are people getting involved in a new way?
Yeah, I think new buyers is probably maybe what I mean is more dealers that haven't necessarily been aggressive in the past that are looking to expand and grow and buy additional dealerships. And so we're seeing a lot more existing dealers that have been on the sidelines, or maybe haven't done deals in the past or been aggressive on deals, really be more interested in acquiring. Of course, the publics have been extremely active. Historically, I think it was, 9 out of 10 deals really were private, private to private. And over the last year and a half or so, the public's probably doubled that pace. And maybe it was, I don't have the exact stat, but maybe it was 20, maybe 20% of the deals were done by the publics. And so, but the absolute number of deals that transacted in 21 was, significant. It was, 30-40% higher than the prior year. And again, a lot of that was driven by the publics, but the privates really were aggressive. And we saw a lot more deal making on private to private deals. There is, of course, private equity swirling around, as they always have been, and we have seen a little bit of private equity get deals done. There's still a lot of interest in private equity, but the strategics, which are really existing dealers, tend to be the most aggressive, able to move the quickest, able to get deals done and get approved on deals. So we still see that trend kind of prevailing here.
Okay. All right. Obviously there's a lot of smart investors who noticed the profitability of retailers during the the pandemic and wanted to get in. And you're right. And if the other dealers were faster at making a lot of deals, maybe another way to get in was through the publics. They could buy into them, and they did in droves. But now, like the rest of the market, the public dealer stocks are back a little. Do you see that influencing the market going forward? Do they have less Is there maybe a little less powder for them to play with?
Well, look, the public company valuations are really a pure proxy for what deals are worth in the industry, and markets are forward looking, right, and value things into the future. And to your point, the publics in general are trading off approximately 40% from an enterprise value, EBITDA to enterprise value perspective. So cash flow perspective, they're trading well below the record levels, and that's the markets are factoring in. Are the markets factoring in the ability to continue these high record gross profit levels? Are they considering inflationary pressures and rising rates? And so all these things are swirling around, but really in the end, it's how long will these profitability levels last? And again, markets are forward looking, forward thinking, and so values are being impacted. And how does that translate into the buy sell market? Just generally speaking, it's the question we deal with every single day. How do you value a dealership? And we're seeing all sorts of different. Every deal stands on its own, of course, and in one store, there could be a different, a story behind one store that isn't, necessarily indicative of how overall dealerships are valued. But generally speaking, the larger deals, how do you value a transaction? And we see a lot of buyers looking at averages, maybe a 3-year average, or averaging kind of pre-pandemic and current levels of earnings. What folks are struggling with is some sellers, expecting to be paid off of these current levels of earnings only, and is that indicative of the long-term actual future cash flow stream of these businesses? And so, as we think about the publics and where they're trading, does that give some of the publics, that valuation gap? Does that change the mind? I think time will tell. Publics have been very aggressive, of course, as we know, a lot of large deals. I think, we did the Park Place transaction in 2020, which I think kind of kicked off large deal season, as we like to say. And then from there, we did the Suburban deal, large deal in Michigan with Lithia, and then we saw a lot of more additional large deals happen. Larry Miller, Prime, and RFJ. And so, there's a lot of deals to be absorbed there, and the publics were very aggressive there. And will that continue? I mean, we're seeing a robust market, still today. But,
even still,
these are interesting times with kind of the all these pressures we're talking about, and how long will these profitability levels last, and then how will sellers' expectations adapt, and current expectations versus future expectations adapt to all those factors.
Thanks for tuning in. Listen now to Jamie's full interview and the day's headlines on the Daily Drive podcast, available on all podcasting platforms. Have a great day.